What is up, everybody? What is up? Hello and welcome to the Commercial Real Estate News Hour. It's a weekly podcast at 3 p.m. Eastern Standard Time where we come to you live, discuss current events and everything commercial real estate. My name is Henry Eisenstein, and I'm with my co-host, Rafael Koyazo. How you doing, my friend?
Great, man. Can't complain. It's not the greatest weather here right now, but and I just got back from Argentina, so the 88 degrees versus
a little different than Argentina.
Yeah, it's much different, but it's been super busy, man. I feel like just it's been gangbusters since the beginning of the year, which is good. It's obviously optimistic for the market, and trying to capitalize on what you can. So
100%. We got a bunch of good articles today. Lots of cool current events going on.
Yeah.
Where would you like to start off, my friend?
Let's get this rolling here. I'll throw this up real quick.
And obviously, if you guys are tuning in, please let us know where you are tuning in from. And if you have any questions or would like to debate with us what your thoughts are, your opinions are in any of the articles, please feel free to be as vocal as you'd like.
Absolutely. All right. So first up is slight uptick in CRE loan closings signals possible stabilization of financing market. So kind of alluding to the discussion we just had right now, that it does seem that there's a lot more action happening on the lending side, which is obviously great from a transaction standpoint. So they talked a little bit about how the fact that the Fed has kind of showcased the market that they're willing to hold steady for a while. Anytime there's major volatility, lenders get skittish because lenders are inherently risk adverse. And if it's really hard to project where the future is going to be if it's constantly shifting and there's a lot of volatility. So now that things have started to stabilize and there seems to be light at the end of the tunnel, lenders are starting to get more active in the lending space. So they talk a little bit about some of the uptick in volume that's occurred based on Q4. I think I think the previous quarter they had, let me see, banks comprised nearly 40. No, there was a reference here regarding here it is. Okay. CRE lending momentum index increased by 1% in the fourth quarter, marking the first quarterly rise since the start of 2022. So there is an uptick. And also, I mean, obviously the total delta is still pretty wide. It was 38% compared to the year prior. So there's still a significant drop off in lending compared to before interest rates started rising. But there is, again, light at the end of the tunnel, and I'm pretty optimistic that we're just going to continue to see an uptick in lending activity, and that's going to bode well for transaction volume. So
yeah, I'm definitely very curious to understand. Like, we had such a crazy uptick in lending volume through COVID. And I'm curious to see how we are doing in comparison to 2016, 17, 18, 19 versus the 2020 range. Because I feel like, you can get kind of mixed up with this, where in 2020 through 2022, while rates were fantastic, at somewhere in the, to call it, high ones to mid threes, whatever you want to call it, sub fours. And then, which was obviously, completely out of, basically the lowest interest rates we've ever seen in, call it, history. And then now you have all this stuff that's saying like, well, we're still 38% below that high. I still want to know, like, how much was that high above the average, right, for the years prior. So I'm just curious, like, because I really do feel like things are really picking up. And I think within the next 12 to 24 months, we're really going to start seeing interest rates kind of plateau, kind of even off, kind of be in a good position where I think for all investors all around the country, I think we'll be in a good place to start really dipping our toes back in the water. I mean, like, that's what I'm starting to do now. To start getting, a lot heavier in the investment world.
Absolutely. And the money was never an issue. I mean, people have money out there. They just want to be able to put it to work, and lenders, were requiring significant down payments, and their debt services coverage ratios weren't in line with where they needed to be in order to issue the loan. And so now lenders are getting a little they're not as aggressive as they were in 2020 or 2021, where they were just kind of going for all these different opportunities. But it definitely is a shift, and you're starting to see a lot more activity. I'm getting a lot more lenders reaching out to me to say, hey, let's go grab lunch. Let's try to see what we can do this year. And so there's a lot of optimism, at least on the lending side, to what 2024 looks like. So
yeah, for sure.
All right. So next up is going to be one of Henry's articles, and it is Macy's expects $750 million from property sales as it shuts down 150 underperforming stores.
Yeah. So Macy's just traded.
Mhm.
And there was a takeover. They sold out the company. New CEO Tony Spring coming in hot,
Mhm.
and they are selling off a few of their main locations, which I believe actually we may have spoken about previously. But I believe they're selling their flagship store or the building where their flagship store is in New York, trying to get some cash injection and closing down a lot of their stores. Like you said, about 150 of them, and they're going to remain with about 350 stores nationwide, or maybe even internationally. I don't want to make any claims, but long story short, this is just another one of those articles where you should have your ears perked up because they are a fantastic type of business where if there's a retail center in your local market that has a Macy's, calling up the owner and saying, hey, guess what? This, just wanted to give you a call. Just curious to see if you might consider selling. Did you read this article? I don't know if your location is going to be one of the 150 that will be shut down or one of the 350 that will be staying open. So keep this in mind. It's these types of articles where it's like, hey, how do I capitalize on these types of opportunities where, you can be the one to, basically save an owner from some financial turmoil when all of a sudden they get a phone call from Macy's saying, hey, we're actually going to be not continuing our lease, not extending the lease. So definitely something pretty interesting here. I mean, obviously you can see some of the statistics down here where it says from this year of till 2026 in a footnote of its investors presentation, Macy says it expects the asset sale gains of 250 million to 365 million dollars for non-go forward stores and distribution centers slated for closing. Within this expected sale proceeds of 500 million to 650 million, the asset sale gains of 250 million to 350 million of non-go forward stores. The point is, they are going to be closing a ton of stores in great locations, or I'd say most of the time they're going to be closing the stores in not so great locations. But this is just to go to show. Like, I guess it's the same. It is determined the 150 non-go forward stores,
Mhm.
which is the ones that they're closing now, represents 25% of Macy's gross square footage, but less than 10% of the sales, which makes sense. You should be getting rid of those locations. That makes sense, big time. So, anyways, really, really good opportunity for you guys to be reaching out to your local retail centers that have Macy's in them and try to get a hold of the owners and say, hey, check out this article. Might be something that we could do some business on.
Definitely. Yeah. Yeah. And it's interesting too, because I'm sure some of these owners probably had an inkling about whether or not they were actually going to be a no-go forward store, because oftentimes with these large centers, they'll require you to provide audited financials on a, quarterly, biannual or annual basis. So I'm sure they had access to the performance of the store, and, I'm sure it won't be a surprise if they do get the notice, but you're right. 100%. I think there's, definitely opportunity. And it looks, I mean, another interesting thing is you can see down here, it says the company also will proceed with a plan to debut up to 30 more small format Macy's stores through 2025. So kind of going in line with that shrinking of the retail footprint. Again, it seems like more and more concepts are requiring less and less space, which is not inherently a bad thing, because if you have 20,000 square feet of space, maybe you had a single tenant in that space, but if you break it up into 6 spaces, now you could potentially have 3 at, just over 3,000 feet a pop, and, the
When
price
was
per
the
square
last
foot.
time you even stepped foot into Macy's? I haven't been to a
I haven't,
Macy's
no. So my dad
in
was
the
big
longest time.
into my dad used to love Dillard's, and I mean, I was there, I went to visit my dad for the holidays, in Sierra Vista, which is a small town in southern Arizona, and it's like one of the only stores they have, like the major stores they have there. And I just remember walking to Dillard's, and it felt like something out of the 80s. Like, I don't know, it just the vibe was just kind of odd, so
100%. Like
yeah.
I don't even know why I would go to Macy's. Like unless you need a cheap suit or
Mhm.
some very discounted pricing on, bedding,
Mhm.
what on planet Earth are you going to Macy's for? Like, are they, they're just a big time closing shop? I mean, or a clothing shop or a clothing store? I mean, like, I just feel like it's just,
Yeah.
I don't see the purpose of going to Macy's anymore. I was a big Nordstrom guy. I'm a big Nordstrom guy.
Norsem's great, yeah. I mean, and it's interesting. I don't know if you've read the book Made in America, from Sam Walton, but he kind of refers to, I
It's a
think
great book.
he cut his teeth at Macy's, didn't he? And then he kind of, or was it Macy's or one of these other department stores? But that guy was an
I
animal.
forgot which one he started at.
Yeah, but that guy was an animal.
Well, yeah,
Pretty
I mean,
impressive guy. There's
biggest
a reason why
organization
Walmart.
on revenue ever.
Oh yeah, 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 and it's because of his dedication to being so resilient or consistent about the detail and the performance of his stores. So
Did you hear about it? You know, he got like arrested in like Brazil or something because he was on the floor measuring
yeah,
aisle
heard about
lengths.
that. Yeah, yeah. He would do that to competitor stores. He would just go there and start just like walking around and laying down and taking measurements and looking
Measurements.
at what they had. And I'm
I
sure
love it.
people were looking at him like he was crazy, but Sam
Well,
Walton is a one of a kind, and he's an American treasure, as they say.
that's
But
right. What do we got going on here?
all right, so next up is student housing pre-leasing breaks records as the sector gains momentum. So, you know, they talk about primarily the pre-leasing. So that's as new construction's occurring, they are essentially trying to pre-lease the space so that come day one they have it as fully occupied as possible. But based on what they're seeing right now, if they are at a seasonal high nationally of 54.5% for the 2024-2025 academic year. 22 schools are already at 75% pre-leased, with 4 of them above 90%, which is kind of insane. Um, so this is somewhat in contrast to what you're seeing right now in the multifamily space, which, granted, multifamily more so, residential, not actual student housing, that has experienced a downturn, not necessarily a downturn, but it's definitely experienced a significant downturn in transaction volume, and pricing has definitely been affected as well. It seems like the student housing space has stayed pretty steady comparatively. And I don't know, I have my whole separate opinion on universities and the cost that they charge their students and the
That
burden that
it's
they incur.
ridiculous and that
Yeah, the burden
yeah,
that they incur throughout their existence, and the mantra that people push about having to go to university to be successful, which I think is kind of hogwash myself. So, but
agreed.
it just kind of goes to show, it's since COVID, I guess they've had a significant uptick in demand for student housing because more and more people are continuing to go to college. And for some people, I obviously think it's phenomenal, but that teach their own, as they say.
Yeah, I mean, this is actually kind of wild to see the drastic uptick in the student housing world. It's kind of wild to think about how, like, if you have a apartment building near a college where you can actually take a one bedroom and make it technically a two unit, right? You
Mhm.
have now these abilities to get drastically higher rents if you play your cards right. I mean, now obviously you have to play the cards of also, like, during certain parts of the year, you're gonna have possibly pretty high turnover, right? But I think that it's a very lucrative business opportunity to be looking at multifamily in these I guess higher demand college markets where and obviously you're obviously going to have a good level of repairs and maintenance that you're going to have to be utilizing because there's going to be twice as many people in your apartment. But I do believe it's a super interesting opportunity for a lot of smaller time investors to be like, hey, maybe you should buy that two fam, three fam, five fam, 10 unit, 50 unit in that local market for a little bit more money because you can probably turn around and get it rented for a much higher price. So very interesting. I've never done any student housing deals, but it definitely opens up my eyes. I mean, in New Jersey, there's not a lot of opportunity. Like, I literally have Princeton, Rutgers, or Stockton, which Stockton and Rutgers are very, very like well, Stockton I would never invest in the apartments near there. I hate that market. It's terrible. I don't even like feel safe walking around there.
Mhm.
Rutgers is a very tight market near there. Like, there's so much multifamilies, or at least smaller multifamilies that go on, but they have rent control. So this actually might be an interesting way to get around rent control if you do the student housing. And then in Princeton, I think that super high price per unit basis to even try to make any money there.
Yeah.
Actually, there is TCNJ, which actually you probably maybe I'll look into TCNJ because the local market there is actually pretty damn affordable. So I might have to look into some options there. But is
Yeah.
there anything near you?
No, yeah, there's University of Louisville is kind of in the heart of just south of downtown. That's big. You've got Sullivan University. You've got several other smaller universities. Bellarmine is another one that's local. That's kind of a liberal arts school. So yeah,
Yeah.
there's definitely opportunity, and I've got several friends of mine and even clients who are in the student housing space, and they buy like these either fourplexes or they buy even a large single family home, and then they do the rent by the room where it's like, I'll rent to each individual, have a lease with each individual person, and maybe
Mhm.
it's a 10-month lease because they go away for summer break or whatever, but then they're
Yep.
charging them like $650 per room. And
Yeah.
so if you have 5 bedrooms and you get $650 per room, now you're talking, closer to, 3,300 a month, where the average rent for that house may be $2,000,
Yeah.
So
No.
it can be a lucrative strategy. It does require obviously a lot more management, but hey, you're trying to make
No, it
money.
can be
So,
super lucrative if you do it in the right places.
yeah, most certainly. So, all right. So next up is global AI boom fills power capacity with North America data center hubs. Study finds.
Yeah, so this was interesting where I keep hearing more and more, and I keep seeing more and more about these data centers.
Mhm.
Where, I mean, you can just see how there's a lot, like the green dots here show what's up and coming to be built. Secondary markets are blue and main markets are red. Um, it's actually kind of wild if you look at this,
Mhm.
where this is, guys, we have so much more to go. Like, this is nothing. Like, if you're looking at some of these main markets, there is so much more that needs to be built. Like, if you just look at this and really think about it for a quick second, it's like, look how much of the country still is yet to even utilize any major data center capacities, right? Like, this is a huge opportunity where if you're in the data center business, I still think there's I would say untapped by any means, but I would say there's a huge upside if you can get into the data center business. At least with a client who's looking for data centers, I think you're going to have a huge opportunity for the years to come as more AI companies are being created, and they need more and more storage. I think this is a fantastic opportunity for you to get involved. As a broker, finding good deals, finding opportunities where you can store, tons and tons of data center space. I think this is be an interesting thing. There's a bunch of look, and it's the cool part is that it's all public information. You can
Mhm.
literally reach out to a lot of these data center companies, reach out to them and say like, hey, what kind of product are you looking for? I come across a lot of good stuff off market. Just curious, so I can get an idea. And all you have to do is try to prospect for it, right? So, anyways, I thought this was interesting. My team's been talking about data centers for quite some time, and trying to work on our relationships with those companies.
That's great. Yeah, no, and a lot of these states too. I mean, I'm actually quite surprised that there's such a big, presence of, and not necessarily super surprised because of the fact that this is where the demand is. But what we're starting to get a lot more calls from people trying to do similar type of, or companies starting to want to do similar type of things, because the cost of electricity in Kentucky as compared to other states is also much more affordable. So when you're talking about these heavy power loads, a lot of these companies not only look at sites and say, okay, obviously can we get the property at the right price and build it properly, but the ongoing expenses associated with running the facility are also a big deal, because if you're talking about this level of requirement for electric, I mean, the delta between a X in one place versus 25% more in another place could run hundreds of thousands, if not millions of dollars a year. So,
Mm.
even targeting, looking at the cost of electricity in various different states, I would imagine that's probably why, if you look even in this, like look at Mississippi, it looks like they have an up and coming. I would imagine the cost of electricity in Mississippi is probably pretty reasonable. That's probably a reason why you
Yeah.
see them having maybe some success. I know here in Kentucky, it's definitely becoming a bigger and bigger thing, especially just outside of the Louisville metro area. There's a lot of, you know, warehouse construction and such. So, yeah. So
Yeah.
that's my 2 cents on the topic.
No, I agree with you. I think that there's a huge opportunity in paying attention to that. Obviously, right now they're doing a lot of the coastal hubs, like throughout California, the Jersey area, Virginia, which you saw there. So I think that it'll slowly start building into the center of the country because it'll be cheaper and cheaper as you move in.
Yeah, yeah. And Virginia, I mean, is unbelievable. I lived in DC for 2 years after college, and it was there's a lot of technology companies out there. So,
Ton.
all right. So next up is restaurant sales projected to rise by 6%. So, you know, this particular topic, they focused on the sales and revenue growth for a variety of different restaurants, really on the macro trend. Through COVID, even though there was some, concern in the restaurant space, obviously because you couldn't go physically into restaurants. The restaurants that you couldn't physically go in were greatly affected, but those who had a restaurant or drive through, I mean, it was an absolute, kind of a windfall for them. But now, as we've started to get more into a stable environment, restaurants as a whole have really taken off. And so you're kind of seeing here that they kind of analyze the top 500 most lucrative, or not necessarily most lucrative, but the biggest restaurant chains. And as of 2023, there were 3,500 locations that were created during that year, which was the largest since 2017. And the overall gross unit development should, in the final 2023, be about 22.8%, which is crazy. So I just thought I'd share some of these numbers because it's kind of mind-boggling to see. So McDonald's is targeting expansion of 50,000 restaurants by 2027. That's a 25% increase of where they're currently at. Qdoba's expansion is going to be 1,500 restaurants by the end of 2033. So that's roughly 150 stores.
Which is 50% more than where they're at.
Yeah.
Wow.
Oh, it's 150 stores a year. So you're talking they're going to be opening a store about every day, 2 days and a half. So every 2.5 days, there's going to be a new store open.
McDonald's is be opening like 3 stores a day.
Oh, yeah. I mean, what, 50? Yeah. I read that. I was like, there's no way. That's crazy, the amount of restaurants they're targeting. But again, we're
25% increase.
Globally. I'm sure.
Yeah,
I'm sure we're talking. Yeah,
we're talking 10,000 or 12,500 or something like that, right? We're talking like
40 a day.
10,000. Yeah, that's What is that? 40 a day for 2 years? That's
insanity. I hope that may be a typo, dude. Because I was just like, I read that, I was like, wow. Because
they're going to get to 50,000. No, they're trying to get to 50,000 restaurants, which is 25% more than they have right now. Which I guess that makes sense. They're at 40,000 restaurants now globally right now.
Oh, okay. So they're trying to increase to 50,000. That would make more sense. So, but even 10,000 in 4 years, that's a lot. I mean,
it's not even 4 years. By end of 2027, that's what.
Oh, it's 2024. I'm crazy. Oh my gosh. Yeah, you're right. So it's I mean, 3 years.
2,500 or 3,000 a year.
So that's 8 to 10 a day. Yeah.
God bless.
God bless, man. So if you're looking at McDonald's, that's a probably pretty good look. Qdoba, right. Same thing. They're targeting a 50% increase. Portillo's, which I don't personally know.
I've never heard of a Portillo's ever.
Yeah, I think they're a West Coast brand. I think I've heard of them. They were maybe coming to market when I was over there a long time ago, but I don't recall themselves. And then there's obviously various others that they've highlighted in these restaurant reports. But it's pretty universal that through my interactions with a variety of different restaurant concepts. I do a lot of retail. Most of them are expanding. So they're just trying to find sites that kind of fit their needs, and if they can find it, they're willing to pay the good rent for it. So that's kind of my 2 cents on this. What are your thoughts?
Yeah, I mean, again, this is fantastic to look at. Where guys, you should be trying to get in touch with the real estate departments of some of these largest expansion companies. I mean, this is all public data, right? You can literally figure out which companies are looking for space. I mean, literally Google it, figure out the 10, 20, 30, 40, 50, fastest growing organizations that are looking for space in your area. Reach out to the real estate departments and get an idea of exactly what they're looking for in what areas, guys. I mean, like, this is like the small stuff that no one pays attention to, right? The Macy's closing and reaching out to those owners. We were just talking about another business that was closing and reaching out to those owners, reaching out, like this type of stuff, like paying attention to reaching out to these departments and figuring out where they're expanding to. I mean, like, guys, like, this is the small stuff that no one wants to do, the little itty bitty work, and it's going to change. It could change your business. You could do 5 or 10 of these types of deals a year just from these types of organizations. I mean, imagine selling McDonald's 10 locations this year. They have to open 10 locations a day.
Yeah.
100%. So it's like,
and you capture a small piece of that. You capture a small piece of that, you're set. And obviously, even on the other side, like you're talking about investing in real estate, one of the best ways to structure deals is to have either tenants in tow or have some other value add potential that the seller may or may not have in their back pocket. So you approach them and say, hey, look, you got 10,000 square foot vacant in this center. And, obviously we can't pay you what it would be if you were to fill it all the way, but here's our number. You guys come to an agreement and you already have 2 or 3 tenants already lined up that you could backfill the space with. And then that value goes from here to up here. And you didn't really have to do much outside of just presenting it to the right individuals and making sure that they understand the value proposition. So
that is right.
Yeah.
100%. Huge opportunity, guys. Just picking up a phone and knowing who to call.
Yeah. Yeah. And if you don't know who to call, just do the research, right? If you find out, there's always a way. All right. So next up is appeals planned after judge says votes on Chicago real estate transfer tax are invalid. Oh wow, this is
We're following her, right?
yeah, we've been following this for a while. So
Anyway, so this is what ended up happening was that we had talked about this a little while ago. They were trying to increase the transfer taxes on property. They were going to lower it under $1 million, right? If you have property sales under $1 million, and they were going to drastically increase it for properties over $1 million bucks, and then even more so for over $1.5 million. Okay. And what happened was they made it. If you scroll down, I think there's keep going, keep going, keep going. There was all right. Hold on. Yeah, right here, right there, right there, right there. The referendum. Okay, so apparently what happened was that the lawsuit, because they were like trying to get this passed, and now they're appealing it because they're saying that the referendum that everyone's reading and then responding to is saying is confusing and illegal. So the referendum reads: number one, shall the transfer tax rate be lowered from 3.75 to $3 per purchase value of less than $1 million. Number two, shall the transfer tax rate be raised from 3.75 or $3.75 to $10 for the purchase value between $1 million and 1.5? And three, shall the transfer tax rate be raised from $3.75 to $15 for the purchase value of $1.5 million? And they're basically just saying that, which, by the way, we had talked about this before, saying that it was absolutely ridiculous for them to do any of these types of increase rates, which is just absolutely asinine. Like, New Jersey is high at 1%, and the fact that they're trying to get it to 3% is ridiculous and incredibly expensive, and is going to cause a lot of property values to drop, in my opinion, especially above $1 million. But they're trying to say that, like, the languaging is weird. It's like, no one wants to do it, right? Like, that's the answer. No one wants to do it. This is this very stupid proposal. And I can't wait to see what ends up happening here.
yeah, well, it's funny because, they talk a little bit about, and obviously real estate groups are saying this, but still they're saying that, that it's a form of log rolling, and that they're bundling on popular legislation with more palatable bills so that the well-received bills will carry unpopular passage. So they're kind of trying to roll it all into one and hope that they can get it through to be able to achieve this. And the reason, I guess, that it's not being they say that the proposed reduction in taxes for sales below $1 million is illegal is because Illinois statutes only allow for a referendum to create a tax or increase an existing one, which is kind of mind-boggling to me. Like, you're saying that it's illegal to reduce taxes in Illinois? Like, is that what they're saying? Is that what it says?
It says the complaint also alleged that the taxes on a sale below $1 million is illegal because Illinois statutes only allow for a referendum to create a tax or increase an existing one. Yeah, so you can't lower it. That's ridiculous.
That's crazy. Anyways, I just thought I'd point that out because when I read that, I was like, wow. That's surprising. I mean,
in Illinois, run.
Yeah. Hey, I love Chicago. It's a beautiful city. There's a lot to do. But yeah, I mean, it is a very short-sighted view, because really above $1.5 million in Chicago is like, I mean, that's really not that much. I mean, you're talking what percentage of the existing building stock would fall into that category? Almost all commercial real estate would fall into that category, and then even 100%. Some residential property would fall into that category. And
a huge amount of residential sales, and just about every single commercial property. If you took off maybe 5% of the tiny stuff.
Yeah, exactly. So it's like you're affecting, call it, I don't know, 60% or 70% of all the existing stock in Chicago. Like, that's
ridiculous,
a lot.
And you're making people pay 3 times as much for transfer taxes, which is just asinine.
Yeah, no, I agree. So I know where we both stand on this. We tend to agree. It's interesting. I'm looking forward to seeing the continuation of this, because I'm sure, similar to like what happened with NAR and everything, like these types of legislations set precedents, because if this for whatever reason goes through, now some other legislator in some other city decides, oh, well, Chicago got this through, or Illinois got this through, so we're going to try to follow a similar path. And so
100%,
you got to be very cognizant about how you're approaching this, because otherwise you kind of,
Well, I mean, like, it's just crazy, because it's like it boils down to a lot of these ridiculous Congress people, or people in power, political players, who are making coming up with ridiculousness to try to I don't even understand, like, what is this benefiting? Like, they have plenty of money, and they're just trying to do it for tax dollars.
Yeah, I mean, obviously they're trying to do it for a purpose. They wouldn't just raise the taxes for whatever it is. But again, is there other ways to do it to not cripple a complete an industry? Because it's not saying they would cripple it, but it would greatly affect the industry. So it's one of those things you
100%.
got to be cognizant about. So, anyways, but I digress. Next up, job-based expansion in 2023 exceeds national norm in 12 states. So, good news. Nevada is crushing it in job growth percentage. I mean, obviously they've experienced a lot, but you in Florida, you're right here with just over 2.5%, I believe, in job growth. With obviously it beats the national average, and this is a percentage growth. So Florida, I believe, is I think number 3 because of the population. So you guys obviously have much more people living there. So ultimately, you have way more jobs being created on site. But I was pretty pumped to see Kentucky right behind Florida as far as the percentage of job growth.
Nice.
So we've seen a good amount of growth in our state, particularly in areas surrounding Louisville, and even in southern Indiana. There's been a significant amount of interest and growth. So this region has definitely experienced some sizable job announcements, which is great. But yeah, they kind of showcase the breakdown of the different types of employment that are on site or in different areas. So, I just thought I'd share this because, again, we always talk about looking at states and areas that are growing versus those that are kind of falling by the wayside. So,
Yeah, no, this is great to look at, especially for when you guys are looking at national investments, trying to get an understanding of where to place your money, looking at population growth, looking at job growth, looking at household income growth. Like, where are
mhm.
things growing rather than going in the wrong direction? And this is a good idea to say, like, hey, like, if I'm going to place my money, which all of you can place your money anywhere you'd like, this will give you guys some decent idea of exactly where the best places to do it. Where because we were basically future casting, saying like,
Mhm.
hey, these areas are going to be better than what they are today, right?
Mhm.
Because if you're investing in an area which is going to be worse than where it is today, it's a problem, right?
Yeah.
So this is a great article. I really, I definitely have to look a little bit more into this to see where
Yeah,
I would
RealPage
love
does
to.
really nice work as far as data aggregation and stuff. And here you can see the types of jobs that are being created too, which is really helpful because, call it, let's say in Wyoming, it's, a big part of their industry is mining related. So, what types of services support the mining industry? If that's the case, maybe you can find, opportunities to buy buildings that are occupied by, crane operate, whatever that is. Like it adds more color to your investment strategy in those types of markets. So,
Yeah, 100%. I like that.
all right, let's get the next one up. All right. So next up is U.S. market face a shortage of mega warehouse space.
Yeah, so I mean, we had talked about this a little while ago that I feel like it got to the point where they have been overbuilding warehouse for a very, very long time. And then we got to a point where like the vacancy rate started to, raise a little bit,
Hmm.
right? In industrial. But what happens is there is just not a lot of these mega spaces, right? There's a
Hmm.
ton of warehouse space. Like you can go
Sure.
out there, like there's a lot of an abundant amount of warehouse space for the smaller tenancies, right?
Hmm.
But this mega sized warehouse spaces, 500,000 plus square feet per, in one building is rare to
Hmm.
find, right? The majority of industrial buildings larger than 500,000 square feet and destroyed are manufacturing facilities operated by major automakers or their suppliers. But thanks in part to the metropolitan Detroit population of more than 4.4 million residents, the region is also home to over 41 million square feet of mega warehouse properties. So this cohort of properties has increased by 36% or 10.7 million square feet in the past 3 years, as several companies are including Amazon, FedEx, and RGO Logistics have opened up new distribution centers spanning more than 500,000 square feet in the region. So it's a really interesting opportunity here. And obviously this is just around Detroit, but it was talking about I can't remember if you scroll up or down, but it was just talking about how the rental rates, I
Hmm.
can't remember if you go up or down, but the rental rates were skyrocketing, like by double digits.
Let's see. Probably
Um,
up.
Probably up.
Uh, Yeah. So when developers focused on building biggest projects they can, availability rates within existing under construction logistics properties measured 500,000 square feet or larger have surged nationally and rose above 20% in key markets, including Indianapolis, Philadelphia, Phoenix, Savannah, Georgia, Orlando, Florida. So,
Yeah, so it's like, okay, yeah, availability. I mean, like that's insane.
mhm.
That's absolutely insane, right? Where it's like they're the amount of opportunity where it's like, guys, the ability right now is in the details, paying attention to where this stuff is happening, right? Going into these local markets and saying, hey, where can I find places to build this type of product? How much square feet do they actually need? Where is it currently? And where do they have demand for it? And that how can I get involved in these types of deals? Right. I mean, being able to find this type of land so that they can build these types of larger warehouses in the high demand areas is going to give you, not say a guaranteed sale, but the ability to basically have your at least hat in the ring.
Mhm.
Right.
Yeah.
So I think, it's this, every single one of these articles, just like every time I read something, it's like, how do I capitalize on this?
Yeah.
How do I capitalize on this? And I think this is a really interesting way to do so.
Definitely. No, 100%. And, obviously these big warehouses are, even if their availability is not there. I mean, even the smaller to mid-size warehouses are, this is not an article that particularly references this, but locally here, I know it's a big demand too. So, obviously watching the national trends regarding industrial is also helpful, but also considering what's going on locally that you could potentially capitalize on. And again, it's just part of that education process over time. So that is
Yep.
that is the thing. All right. So next up is Jamie Dimond says commercial real estate owners are handling stress. So
This guy comes out with more freaking news articles than anybody else in the industry.
who, Jamie?
Yeah, he's been. I just feel like I see more stuff on Jamie Dimon responding to certain things about the doom and gloom of the world than anybody else.
Yeah, I know. And I mean, he's the CEO of the largest bank in the world, and obviously they've done extremely well even through COVID. And part of that too is their acquisition of some of the distressed regional firms that they could absorb, obviously, because of their cash position. But I mean, he's an amazing leader. I mean, I've watched a lot of
No,
his
he's
stuff.
fantastic. I think he's
Yeah.
amazing. I just feel like every single. I just feel like I have not heard a positive word out of this guy's mouth.
No, he said, but this is actually positive.
Which
He's
is
saying
why
that,
I'm saying I'm
yeah,
shocked. I'm
yeah,
actually shocked.
100%. So he said that in an interview recently, he said that that commercial real estate will be able to muddle through the current economic environment. He says that those owners that will be able to refinance and put more money in if there's not a recession should also just be okay. Essentially, the gist of this particular article is that he was saying that we're not in a situation where there's going to be a massive disruption in the commercial real estate market. Sure, there will be pockets of it. And he says only pockets of the commercial real estate sector will experience problems so long as the country avoids recession. So,
Yeah,
hopefully.
a lot of these huge organizations like Fox, CNN, all this type of stuff
Mhm.
have literally twisted this man's words 100,000 times.
Yeah, I'm sure. I mean, and you always read article. It's funny because whenever you read articles that reference interviews, and there's always just like a small, little sliver of what he said and put it in quotation marks. They're quoting what he said per se, but then the words around it may imply something completely different than what actually he was trying to say or she was trying to say. And so
Yep.
that's where you got to be careful, and really you got to, in my opinion, if you see something like this, it's maybe good for you to consider listening to the actual interview because I'm sure it's publicly available. So,
Yeah, I mean, look, I love Jamie Dimon, like we had mentioned.
mhm,
He's a fantastic leader. He's a great business guy. I love listening to a lot of what he has to say,
mhm.
and it makes me happy to finally see a positive article because I feel like I'm not kidding you. Every single article, I mean, must have been like the past 2 or 3 dozen articles that I've read or
Yeah,
seen have that have him in it have been mentioning the doom and gloom of the commercial real estate market and the economic uh, challenges
downturn.
in general. Yeah,
Yeah,
and it's just wild. So I'm very happy to see some positive words from Mr. Jamie.
mm,
Appreciate that, Mr. Diamond.
yeah.
And I'm excited to see how things turn out.
Say Diamond for president. I say that's what I say.
I'll vote for Mr. Jamie Diamond.
I would vote for Mr. Jamie Diamond. That's funny. All right. So next up is the last article, one of um, Henry's. So multifamily developer confidence slides. Rivian plans job cuts, mortgage rates edge higher.
Yeah, so I was just looking at the multifamily developer confidence in this one, which was, it's interesting to see that, it's down substantially, actually. Like it's a 41 out of 100, right? 41 out of 100 in the fourth quarter of 2023, which is very, very interesting. Um, which obviously now transfers, which you see here, numbers below 50 indicate more respondents' views of development conditions as poor rather than good. So it's very interesting to see this nationally, paying attention to this kind of stuff, because a lot of the real estate agents out there that are focused on multifamily development, this just goes to show that, hey, the development world might not be the best right now, but it's important to understand how to be dynamic as a real estate agent and shift and adapt, and maybe going into more existing product, which might be a little bit more fruitful at the current time.
Yeah, yeah, and it even says here, I mean, the index for leasing of this product is still pretty decent. It's 77 out of 100. So it
Yep,
seems like there's still a good amount of demand for leasing apartment space, which again, I mean, people need a place to live, so there's obviously going to be
100%.
some strong demand. And where interest rates are at, it's almost impossible. Well, not almost impossible, but it's very difficult for a lot of people, especially getting started in their career, to be able to afford a home. So there's still going to be that demand for apartment dwellings. But you're right. As far as the actual construction side of things is concerned, it's obviously been very tough. And I think the big reason for this obviously is the lending environment. I mean, new developments have been kind of not the best opportunity for a lot of banks as of the last year. I mean, they weren't really seeking out these types of opportunities. So I figure as confidence grows in the lending sector, I think that's going to change. So
Yeah, I agree with you. I think that, as interest rates slowly come down, I think that as construction costs start to normalize, we're going to start seeing a much larger uptick in the development world. Which, because we've talked about this a few times with the housing shortage being so drastic, I do believe that development in the right circumstances is still a very smart, lucrative option. However, just overall right now is definitely seeming to be struggling.
definitely.
It's like, I don't know how what you're seeing, but like all these people in New Jersey are trying to ask a fortune right now for development deals, like an absolute fortune on a price per unit basis. And it's like, I think it's absolutely laughable, because it's like
Mhm.
you can't make any money unless you get a steal for the dirt these days.
Yeah, no, I mean, the only way you can make it work potentially is if you can assume the loan. And, even in those situations, I think there's, some concern there because it's, if you built this product at a 3% interest rate and you paid a fortune for it and you're trying to sell it at whatever you think would need to be sold at, I mean, that thing's going to probably come due in the next few years. So unless you have the cash ready to go, it's going to be difficult for you to manage it. So
Yeah, and
and
a
I,
lot
and
of
I,
these people don't, they overvalue their dirt because they want the future value of their dirt value today.
Oh yeah, yeah. I mean that, but and I can't blame them. I mean, I get it. Like there's. It's just so funny sometimes when because we do obviously we're in Louisville, so there's a lot of farmland surrounding the Louisville metro area, and as you start to expand outward, there's a lot more demand for development of these types of parcels, and so you have these families that have owned these land forever, and they're starting to see new development come their way, and they're like, oh, I'm going to charge some absurd value for this particular land when they're just not really that educated on the actual what it actually costs to develop or all these other things. They're just saying, well, this parcel down the street sold for this, so it should be the same for me. It's like not necessarily, man. That's just not
Yeah.
how it works.
It's
So
like they're asking for the actual cost on an existing price per unit building for dirt.
yeah,
Like how on planet Earth do you expect me to pay that?
you can't. You can't. And that's where education comes into play. And that's why it's good. This type of
Exactly.
discussion and this type of dialogue. Like you just have to be able to educate people constantly, constantly.
Yep.
And that's our job as brokers and even as investors. Like if we're trying to get a good deal for ourselves, we have to be able to convey the message effectively to the other party such that we can come to an agreement that benefits everyone. So
Yeah. 100%. Sweet.
well, cool, man. This was a good session. I know that we've been talking about brainstorming different ideas to make this the most valuable it could possibly be. So if you guys are watching this, feel free to type away and share some insights and if some ideas of things that you may want to see more of. And I know Henry and I are going to be brainstorming over the next week or so to kind of come up with some ideas as well to make this as valuable an hour as possible. So
Yeah, absolutely. And again, if you guys have not only any ideas, but if you have people that you'd like us to interview on these podcasts, make sure you drop that in the comment section down below. If you have any ideas or thoughts or opinions about any of the articles that we had reviewed today, or articles you want us to give you our 2 cents on, make sure you drop that in the comment section again down below, or you can email us as always at the deals at crenewshour.com. Other than that, anything else before we wrap up, my friend?
That's it, man. It's always good seeing you every week, and looking
Likewise.
forward to continue this on, man.
Beautiful. Likewise. Have a great day, everybody.
See you guys.